Oil is jumping to a 5-week high. This is Russia and Saudi Arabia. They reached a deal on the sidelines of G20 to roll the production curbs over for 6 to 9 months. OPEC and its allies are meeting right here in Vienna to coordinate that strategy. Take a listen to what the UAE's energy minister had to say on arrival in Vienna yesterday.
I'm for an extension. I think that is needed for the current condition of the market. So I'm expecting a rather easier meeting, and hopefully we'll see the numbers. My expectation on the conformity levels also to be higher than 100%.
Suhail Mazrouei, the energy minister for the UAE. We've just heard from the Iranian oil minister Zanganeh talking about respect from the United States of America for a change. Joining me here in Vienna is Mohammad Darwazah. He is the director of geopolitics and energy for Medley Global Advisors. Welcome to the show. Good to see you.
Thank you. Good to see you.
So, sir, 6 months or 9 months, what's best for the market?
I think 9 months. It gives us a bit of uncertainty going into 2020. I think there's been a lot of concern that we're going to see significant non-OPEC supply growth into the new year, whether that's coming from the United States, but additionally we're going to see more oil come from places like Brazil, potentially Canada. I think for OPEC to extend this deal into 2020 gives us a bit of uncertainty going into next year with concerns of more supply coming to the market.
Well, you talk about that. I just wonder, are OPEC and OPEC Plus seeing something more ominous by pushing an extension of that length?
I think generally, traditionally, it's a bit easier for the group to cut into a weaker demand picture. And over the last few months, we've seen concerns over data, not just coming out of the U.S., but coming out of emerging markets as well, weaker Chinese PMI, etc. So I think it is a positive that they would cut into some weaker demand. However, if at the end of the year they would have to extend those cuts or deepen them, that could be a challenge.
What would it take to deepen the cuts that we've got in place at the moment?
I think it comes down to really Saudi Arabia and Russia. Is Russia on board to continue to balance this market and continue to do what is necessary? I think we've seen over the past 2.5 years this cooperation continue, both on a political and an economic level. However, are the Russians prepared to do another year, for example?
But it suits the Russians to really do this extension because they've got contaminated pipelines, we go into the depths of winter. It's politically expedient for Russia.
Yeah, absolutely. I think ultimately it does come from the top down. We saw over the weekend in Osaka where MBS and Putin have a very good relationship. I think Putin announcing the deal ahead of the OPEC meeting takes a lot of uncertainty coming here into Vienna, and I think the market largely has priced that in. Now, if you get a 9-month extension, I think that sort of is really just the cherry on top.
One argument is, of course, Mohammed bin Salman and Putin agreeing and preempting this meeting disembowels the very essence of OPEC.
You know, this is a kind of a bigger question, a more structural question over sort of medium to long term. I think every time we've met in Vienna over the past 2.5 years, there's a lot of obituaries being written about OPEC, that this may be the end. But I think the market, certainly we've seen this year, has really required OPEC to sort of continue these cuts and remain steadfast in their approach.
Okay, we're seeing oil hit a 5-week high this morning. We've got this relief that China and Xi Jinping and Trump are talking again. We've got to see how that outcomes. So with an extension of the cuts, conversations happening on global trade, what does that do to price bandwidth? Where's the upper level on this deal at 9 months? Where does that take the market to?
I think could be now a bit of a risk relief rally for the next few weeks. However, I think in the near term, the market is wondering what's going to happen in demand. I think we started off the year with projections of demand anywhere between 1.3 to 1.4 million barrels a day in growth. Today, those numbers have been downgraded both by the IEA, the EIA, as well as OPEC. I think very near term, the market is still quite concerned.
How quickly could that turn if there's a substantial trade deal with China? Don't forget, there's Japan and Europe to come in the back half of the year for negotiations.
That's very true, but I think the market already has an eye over 2020. I think the concern now shifts away from demand and more about supply, and hence why a 9-month extension does give a bit of certainty going into the new year that potentially both the Russians and the Saudis will continue this cooperation.
Compliance has been good. 7 months in a row we've seen production drop, but Kuwait is busting the limits and Nigeria is looking for a new deal in terms of their quotas. It's not all one happy family at 9 months, done, sign off.
No, it's not. It really isn't. And I think when you look at who's taken the bulk of these cuts, it's really been the GCC and predominantly Saudi Arabia.
Should Nigeria be given an additional scope to produce?
Well, it's a tough one. I think some of the new crude they're bringing on, as they've been arguing, is condensate rather than crude. I think that's going to be a challenge for them to sort of sell a bigger quota. I'm sure a number of countries within OPEC would like to be producing more. However, a lot of them don't maybe have the capacity.